Hi folks, welcome to today's Bobcast. I'm Bob Binney.
I'm Jessie Thompson.
And we're both certified financial planners with Bob Binney Wealth Management here in Lincoln, Nebraska. So today's topic for our Bobcast is how to beat the market. The market being like an index like the S&P 500 or a broad index of companies. It's very, very difficult to do this with any kind of consistency, but people are always wanting to beat the market.
We're talking about beating the market or different funds or fund managers or advisors will advertise themselves that they're beating the market. This is nearly impossible to do on a consistent basis. And S&P Global has actually been running a study for almost 30 years, I believe. And what that study is doing is it's comparing all of the managed mutual funds and their performance to the relative indexes, and particularly the large cap managed mutual funds, which would be most similar to the S&P 500 index. And what they're looking at is how many of these managed mutual funds are actually beating the market or actually beating their comparative index that they're the closest to.
What is it, probably half of them are beating the market or something?
No, what they've actually found over the last 15 years, 90% of the managed mutual funds underperform the S&P 500. That's underperform the S&P 500. So that means only 10% of large cap managed mutual fund managers end up beating the market. Now, for perspective, if you are a managed mutual fund manager, you make a lot of money because you are supposed to be one of the best at picking stocks. You are supposed to be one of the best at your job. In analyzing stocks and all the things that go into picking the right ones to make the largest amount of returns, right? Well, 90% of them aren't even beating the market. And that's very similar if you look at different markets. So if we're not even looking at large companies anymore, like the S&P 500, even if we go to mid-sized companies, small cap companies, international companies, even bond managed mutual funds versus bond indexes, the percentages are very close to the same. They're all 70 to 90% of them are underperforming their comparative indexes.
Sounds like they're not much better than weathermen predicting the weather.
Right.
So our strategy, or the good news of this, and I started thinking about this long time ago, over 10 years ago, when I realized that most of the vast majority of those managed mutual funds don't beat their respective indexes. I thought, well, wait a second. It's like a light went off over my head. Why don't I just buy the indexes? Why don't we just invest our customers' money in indexes? That way we beat 70, 80, 90% of the mutual funds. Rather than trying to pick the best performing mutual fund each year, we just stick with indexes. We actually use ETFs or exchange traded funds rather than index funds.
You can't invest directly in an index, but there's plenty of index mutual funds and index ETFs that are built to directly reflect the index and the holdings in the underlying indexes.
So some other methods or whatever of trying to either beat the market or stay up with the market are, go ahead.
One of them is taking advantage of dips when the market is undervalued because maybe something happened in the news that scared a bunch of people and caused massive sell-off, kind of like we experienced earlier this year with all the tariff news and uncertainty around that when we had the big dip in the market.
An irrational dip in the market.
Yeah, and kind of
a great opportunity to buy.
Herd type behavior where people just kind of pile on to the negativity. That is a great time to buy when the market is down and do Roth conversions, things like that. So those are kind of some ways that you can get ahead. Another one is just by taking on more risk than what the market carries. So people do this by maybe leveraging a little bit more in a certain sector that is a growth sector, or like technology, or maybe they have a higher concentration in a certain more volatile stock or something like that, like Apple, Nvidia, something like that. With risk comes reward, right? So if you want a little bit more reward than what the market is offering, you got to take a little bit more risk than what the market is offering.
So on the other hand, investors that are using a do-it-yourself approach often underperform the S&P 500, or studies have shown, a Dalbar study have shown that they underperform the S&P 500 by about 6% annually over a 20-year period. This is because they make mistakes, because they make investment mistakes, because they're making decisions based on fear or greed, which causes them to do the opposite thing that they should be doing when the market is going down or up.
So our job as your financial advisors, I think kind of a misconception maybe that people have is that I'm going to hire a financial advisor because I want them to get me the best returns that I can possibly get on my money, and I expect for them to beat the market every year. Well, as we can see, even the very best of the best cannot do that. It's impossible to do on a consistent basis. But what a financial advisor's job is to do is to keep you from making those mistakes that can hurt your returns, those mistakes that are based on fear and greed. So the behavioral coaching that a financial advisor provides, the different tax strategies and estate planning things that a financial advisor can do, and the different parts of advice that financial advisors give. There's actually been studies that have shown that those can boost the growth of your wealth by 2 to 3% on an annualized basis over
Those are studies
long haul.
by Morningstar and Vanguard. So the added value that a financial advisor, a good financial advisor can give you is keep you from losing money by making mistakes based on fear or greed or chasing the next shiny investment that might turn out not to be so shiny, and giving you extra advice, like Jesse said, estate planning, tax planning, retirement income planning, those kind of things that add value to you.
We hope you found that helpful. Hope you have a great week. Tune in for your next Bobcast.
Have a blessed day.